Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Fufeng Group Limited Annual Report. Fufeng Group Limited is a diversified investment holding company that operates through 5 main segments: food additives, animal nutrition, high-end amino acid, colloid, and others. The company offers a wide range of products, including fermentation-based food additives such as monosodium glutamate, starch sweeteners, and compound seasoning. In addition to food additives, Fufeng Group also provides biochemical and starch-based products, animal nutrition products like refined corn products and threonine, and high-end amino acid products. The company's colloid segment offers xanthan and gellan gum products, while the other segment includes fertilizers, synthetic ammonia, pharmaceuticals, and other products. Furthermore, Fufeng Group is involved in various other businesses such as the manufacture and sale of autoclaved aerated concrete blocks, research and development of new biological techniques, information services, sales of cosmetics and biological products, logistics and heating services, and imports and distribution of alcoholic beverage products. With its diverse range of products and services, Fufeng Group has established itself as a leading player in the industry. The company's product offerings can be summarized into several key areas: food additives, biochemical and starch-based products, animal nutrition products, high-end amino acid products, colloid products, fertilizers and pharmaceuticals, autoclaved aerated concrete blocks, cosmetics and biological products, logistics and heating services, and alcoholic beverage imports and distribution. Fufeng Group Limited market capitalization of 20 billion is significantly larger than the average industry peer of roughly 1 billion. This shows that Fufeng Group Limited holds a significant advantage in their industry. Fufeng Group Limited trades at a lower price-to-earnings ratio of 7 times and a higher price-to-book ratio of 0.9 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price-to-book value than it peers. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap, and if it would be better to be investing in its peers than Fufeng Group Limited itself. The company maintains a moderate leverage profile, with liabilities making up 49% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 4.43%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline in the company's financial performance can be identified through an analysis of various segments and factors. Revenue growth is primarily driven by the increase in revenue of the animal nutrition segment, which saw a significant rise of 20.3% year-over-year, YoY. Additionally, the high-end amino acid segment experienced a notable increase of RMB 0.76 billion, 34.4% YoY, while the colloid segment also saw an increase of RMB 0.38 billion, 30.1% YoY. Furthermore, the food additives segment contributed to revenue growth through increased gross profit contribution. On the other hand, revenue decline is attributed to several factors. The high-end amino acid segment experienced a significant decrease of -10.9% YoY, while the colloid segment saw a substantial drop of -32.2% YoY. Additionally, the food additive segment declined by -4.7% YoY. The analysis also highlights segment-specific drivers, where the animal nutrition segment's growth can be attributed to higher sales volume and gross profit contribution from threonine and lysine. In contrast, the high-end amino acid segment's decline was due to decreased revenue and gross profit. Other factors contributing to revenue growth or decline include changes in contract liabilities, amortization of deferred income, government grants related to expenses, indemnity received from a lawsuit, and gains from sales of carbon emission quota. The net income of various segments within the company has undergone significant changes. The food additives segment saw an increase of 17.1%, while the animal nutrition segment experienced a rise of 13.5%. Conversely, the high-end amino acid segment witnessed a decline of 6.3% in net income. Additionally, MSG revenue decreased by 6.8%, and the high-end amino acid segment's revenue dropped by 11%. Profit margins have also undergone changes across different segments. The food additives segment saw an improvement of 2.7 percentage points to 13.5%. In contrast, the high-end amino acid segment experienced a decline of 2.7 percentage points to 39.7%. The animal nutrition segment's profit margin increased by 0.5 percentage points to 23.7%. These changes in net income and profit margins suggest that certain segments are performing better than others, with some experiencing growth while others face declines. The company's financial performance indicates a positive trend in its operating cash flow. On page 4 of the summary, it is explicitly stated that the company generated an operating cash inflow of RMB 14,311,000 in 2025, with a clear indication of positive operating cash flow. Yes, furthermore, on page 39, it is mentioned that the company achieved a net cash inflow of approximately RMB 911.3 million from operating activities in 2025. These statements provide conclusive evidence that the company is indeed generating positive operating cash flow. Despite conflicting information on other pages, these clear and direct statements confirm the company's financial health in this regard. The company's debt level has undergone significant changes in the recent period. Total borrowings have increased by a substantial 55%, rising from RMB 11,364,468 to RMB 17,645,810. This increase is largely driven by an expansion of current bank borrowings, which grew by 51% to RMB 10,865,910. In contrast, non-current bank borrowings decreased by 43%. The overall total debts also increased from RMB 11,364.5 million to RMB 17,645.8 million. In terms of interest expenses, the company has seen a notable increase. Interest expenses rose by RMB 52,810, while finance costs grew by 27.8% to RMB 57 million. These changes suggest that the company's increased debt level is resulting in higher interest payments, which may have implications for its financial performance and sustainability. The company's financial strategy has been focused on rewarding its shareholders through dividend payments. In a significant move, the company has paid dividends, demonstrating its commitment to returning value to its investors. This decision is likely driven by the company's strong financial performance and desire to share its success with its stakeholders. As per the provided information, the proposed final dividend and full-year dividend payout ratio can be found on page 1 of the report. For those interested in specific details regarding interim and final dividend payments in 2025, they are encouraged to refer to page 22 of the document. Concerns about inventory buildup or supply chain disruption have been raised in recent reports. One notable instance is the decrease in coal imports, which dropped by 9.6%, as mentioned on page 30 of a relevant document. This decline could potentially disrupt the supply chain and impact various industries that rely on coal. Furthermore, geopolitical tensions and increasing regional protectionism are also causing concerns about supply chain disruption. As highlighted on page 41, these factors can lead to trade restrictions and reduced imports, ultimately affecting the availability of essential goods. That concludes the financial summary for Fufeng Group Limited. Feel free to comment below, and I will be happy to answer them when possible.